Good evening, ladies and gentlemen. Thank you so much for joining us for tonight's edition of HR Mentorship Learning Series. My name is Oluyemi Adeosun, and tonight we will be looking at the topic, Understanding the New Tax Reform Act. Ladies and gentlemen, our facilitator is a regular on this platform and one of our key committed members on the HR mentorship community. His name is Felemu Daniel, and I would like to read his profile very quickly. Ladies and gentlemen, Daniel is a dynamic human resource professional with up-to-minute expertise in recruitment, selection, compensation and benefit, taxation, employment legislation, and statutory reporting. He ensures full regulatory compliance across payroll and employee benefits by interpreting complex tax and labor laws, embedding best practices, and aligning HR process. His career spans Nigeria's agro-allied, automotive, maritime, construction, and banking sectors, where he has led talent acquisition, designed competitive, tax-effective reward programs, significantly contributing to timely remittances and reporting to statutory bodies. He's known for strong interpersonal acumen, I can testify to that, and unwavering integrity, I can also testify to that. Daniel excels at integrating taxation strategies to drive compliance, financial discipline, and a high-performance culture. He's a member, Chartered Institute of Personnel Management of Nigeria. He's also a member of the Institute of Chartered Accountants of Nigeria. So he's a chartered accountant and he's also a chartered HR practitioner. So you understand, he's dual certified and very competent to handle this very specialized and also emerging area. He has a master's in business administration from Obafemi Awolowo University. He also has his first degree in accounting and finance from Bells University of Technology, OTA. At the moment, he's a team lead compensation and benefits, Sterling Bank Limited. Previously, he had held roles like team lead compensation benefit and welfare management with Nova Bank Limited. He was also deputy payroll manager with Kappa and Delbato PLC, and previously account executive with TOG Shipping and Offshore Management Nigeria Limited. Also, account officer, Service Machinery and Trucks Nigeria Limited. Ladies and gentlemen, you can see that he's eminently qualified, both in practice, theory, and certification to handle this training. He has also undergone several trainings around these new tax laws specifically. And tonight, this evening, we'll be speaking to us on the Understanding the Tax Reform Act. Please, let's welcome my friend, my colleague, my brother, and our facilitator for tonight, Felemu Daniel. Over to you, my brother.
Thank you, Doctor. Good evening, everyone. Joining us from Lagos, joining us from Port Harcourt, Abuja, wherever you're joining us from. It brings me interesting moment to share this learning series with us. It's actually one of the most significant subjects that has evolved in the corporate industry, spanning across all sphere of profession, irrespective of whether you are in HR, whether you are in finance, whether you are in engineering. Tax is a levy that is imposed by the government, and as such, ignorance will not be an excuse. So, and for that, on that account, I would want to share, valuable nuggets, knowledge-driven information with us in this session, and talking about understanding the new Tax Reform Act. What it means is that the certain certain taxes were already in practice, right? And because those certain taxes are already in practice, it implies that they will be reviewed. And as a result of their the modification, it means that certain things will be taken out, another thing will be brought in. As a matter of fact, we had a tax committee, a presidential tax committee that was led by the person of Taiwo Yodele, one of the qualified accountant of the financial in the Institute of Financial Chartered Accountant of Nigeria, that's ICAN. So he led the committee that was mandated to carry out the constituents of what the Nigerian Tax Reform Act entails. Before it can become an act, it was originally a bill and passed by the House, and invariably it was approved, and it was also concurred by the presidency. So in view of that, we'll be talking about certain objectives, certain scope, and what are the overview of the Nigerian Tax Reform Act. So without taking much of our time, we'll be looking at a clear view of what the 2025 Nigerian Tax Reform Act entails, updating us on the key changes that will be introduced as a result of that act, and also we'll further discuss on how these changes will impact services, businesses, and of course the economy. So moving forward, the Nigerian tax landscape has entered a new phase with the signing of Tax Reform Act 2025. This landmark legislation is designed to make the system more efficient, equitable, and supports business growth. So what began as a proposal in 2024 has now become law, reshaping existing tax structures and widening the tax base and aligning with today's economic realities. In this session, we're going to look at the key provisions of the Act and what they mean for individuals, businesses, and the wider economy. One thing I have noticed whenever I try and take a session on tax is that oftentimes, I don't want to say citizens, I don't want to say taxpayers, they are not always they are not always happy, right? They are not always impressed about oh, who are we talking about taxes? Who are we talking about taxes? Why is the government only about what they can get from people? As a matter of fact, I'm not depending on the government. So why are they so all of these arguments evolve from time to time. But one interesting thing I want us to take out from this session is how it can be of value to you. Whether we choose to agree or whether we choose not to agree, tax is a levy, is a compulsory levy that everyone is imposed to pay, right? Depending on this kind of service or transaction that you benefit or that you enjoy moving forward. So, what brought about the propositions of the Tax Reform Act? As we can see on the display, we have four major legislations that brought about the Tax Reform Act. We have the Nigerian Revenue Service Act, we have the Joint Revenue Board Act, we have the Nigerian Tax Administration Act, and we have the Nigerian Tax Act. Now, I'm going to try and break it down, not because I expect that, HR professionals are going to be in the room, or probably a finance professional is going to be in the room. I will try as much as possible to to grow granular in such a way that at the end of the day, you'll be able to even facilitate a session on tax after this learning session. Now, talking about the Nigerian Revenue Service Act, that act was profounded to replace the existing Federal Inland Revenue Service Act, right? That was instituted in 20. So I will just take it all over again. So I made mention of four legislations that were profounded on the basis of the Tax Reform Act: the Nigerian Revenue Service Act, the Joint Revenue Board Act, the Nigerian Tax Administration Act, the Nigerian Tax Act, and the functionalities that every of these regulatory agency propounded are meant to carry out differs. The Nigerian Revenue Service is meant to replace the functionalities of FIRS, that's Federal Inland Revenue Service. And as such, the Federal Inland Revenue Service is the body that is responsible for assessing, collecting, and accounting for revenue that is due to the federal government, right? While the Joint Revenue Board is actually meant to serve as a bridge behind the 37 State Inland Revenue Service and the FIRS, which will now be called the Nigerian Revenue Service. And in cases where professionals or corporate organizations have, they have maybe tax complaint, or maybe they want to render a tax appeal to possibly the regulatory tax body, what they are saddled to do is they will have to go to the office of what we call the tax ombudsman, and that tax ombudsman is the one that is going to assist to harmonize the revenue administration of such a corporation, coordinating tax matters and provide a framework that is of its essence is to resolve disputes between that organization, between that corporation and the Federal Inland Revenue Service, which will now be called Nigerian Revenue Service, effectively from July 1st. So for Nigerian Revenue Service and the Nigerian Tax Act, and as well as the Nigerian Tax Administration Act, those ones are going to fully take effect 1st of January 2026. Now, the Nigerian Tax Administration Act is an act that provides uniform procedure for consistent and efficient administration of tax laws, making compliance easier for taxpayers, optimizing revenue collection across all tiers of government. What does that imply? What it implies is that if you as an employer of labor, if you don't know where you stand, you can engage the Nigerian Tax Administration. All right, we have organizations that they are meant to render their taxes or their levies to the State Inland Revenue Service, right? But because they don't know, the essence of why the Nigerian Tax Administration was brought in place is to do what? Is to give them a soft grant in doing what? In ensuring that their administration of taxes are rendered. Then we also have what we call the Nigerian Tax Act. You see, the Nigerian Tax Act consolidate and streamline Nigerian laws. So we have quite a number of laws. So the essence of the introduction of the Nigerian Tax Act is such that it's going to reduce the corporate income tax rates, exemptions for low income earners from personal income tax, adjustments to value added tax, and so many other modifications that is going to be effective in the tax effective from 1st of January 2026. So the functionalities that every one of them play is different. Now, when it comes to, if you want to know about penalties, right? If you want to know about infractions, right? Or you want to know about the rate that is applicable to you as a service provider, you take a look at the Nigerian Tax Administration, right? If you want to capitalize on how to streamline the tax laws, you take a look at Nigerian Tax Act. I don't know if that is clear. So if you want, possibly we have a scenario of an organization that has a case with that has a case with possibly the Federal Revenue Service, and as such, they would like their what they call it now, their tax advisors, right? Or maybe their external consultants, external tax consultants, or maybe external tax professionals to interface with FIRS. What they will do is the representative, that's the external consultant, tax consultant, will have to engage with the Joint Revenue Board, right? Because the Joint Revenue Board assumes the office of resolving disputes as far as tax administration is concerned. Moving on. Yeah, I made mention of something earlier on during the point of introduction. Professionals, we are not always happy. Oftentimes, we don't get happy when the conversations of the Tax Reform Act comes up. Why? Because of people believe that they are not really benefiting from the government, or could it be as a result of lack of accountability on the part of public officials? It interests us. It interests to us to know that in as much as you are paying your taxes, right? It is imperative for you to demand for transparency, either from your employer, right? As an employer of labor, whether you actually got your what do you call it now, your outsourced employees, or probably you have your core employees, it's important for you to be as much as possible transparent in the rendition of taxes, in the administration of your taxes. Why? Because of it is meant to be originally, it is meant to be a win-win situation. Why am I saying win-win situation? It's meant to be a win-win situation for you as the employer, right? For that employee, right? And for the government, because the government are going to use it for capital projects, right? But the sad reality of our economy is such that people do not find people do not find public officials, they don't find them accountable for the taxes they have been remitting. However, it is important to note that above all said and done, it is imperative for you to have what we call a tax card. We'll get that, we'll get that, and we'll get into that later on in this session. So moving on, we have what we call a direct tax. And a direct tax is a form of tax that is directly that has a direct reflection, right? It is deducted from source. It's a tax that is deducted from source directly from the consumption or from benefiting from a transaction. And of such direct tax is company income tax. Now, what is company income tax? Company income tax are those taxes that you remit or that you pay to the government after you have factored all your allowable expenses and you have taken them off from your net profit. Now, a company income tax, right? Before now, we used to have different stratas for the company income tax. We have three tax rates. We had medium-sized companies, and for medium-sized companies, what they paid then was 20% on the ground that your turnover is between 25 million and less than 100 million. Then we have another strata that pays 30%, and that is on the basis that your turnover is above 100 million as an organization. Then we have the 30% strata. The 30% strata are those that they pay they pay they pay they don't pay company income tax, right? Because they fall below the threshold of 25 million turnover. But now, what the modification in the Company Income Tax Act is trying to tell us now is that the company income tax will now be at 30% for medium and large companies under Nigerian Tax Act, which will be effective from January 1, 2026. So companies are classified as small if their annual turnover is 100 million or less, and their fixed assets do not exceed 250 million. The truth of the matter is that what it means is that if your annual turnover is 100 million, right? And your fixed assets does not exceed 250 million. It is not saying or your fixed asset. It's saying that if your annual turnover falls within the threshold of 100 million and your fixed asset does not exceed 250 million, you are subject to paying 30%. Now, the interesting thing is that the modification within the company income tax also introduced what we call top-up tax, right? And top-up tax is such that you have to pay a minimum of 15%, right? You have to pay a minimum of 15% if your threshold your turnover threshold falls within 50 billion. Now, the new tax act caps deductible donations. It stated at 10% of your profit before tax. What it means now, what that paragraph is saying is that before now, if before now, if you don't remit taxes, right, you can make donations. But now, if you don't remit your taxes, right, you cannot claim donations. You cannot claim deductible donations, right? And also, deductible donations are what organizations do as PR, be it research and development donations, be it maybe what do you call it now? What do you call it now? Be it donations that has to do with public, that has to do with public relations basically. So now there's also the introduction of development levy at 4% on the company income tax. Now, one thing I want us to understand is that within this phrase, right? Within this phrase, right? Before now, organizations play their way around taxes, right? And it is easier for them to evade tax. But with the way the current government, the current political administration is going, it is going to be the type that for a company to even transact, they must have a tax identification number. And that tax identification number is going to be the type that for before you can even say you want to transact, before you can even say you want to even create an account, it's going to be a compulsory prerequisite. It's not going to be something that, I want to create this account. I'm not going to have my tax identification number. I just want to use it for this purpose. It's a small business I'm creating. No, the government have realized that people hide under the disguise of, I'm a small company, or because I fall within the threshold of a turnover of less than 25 million, I will not pay tax. No, what they are now doing now is that you are going to link that your tax identification number to the creation of your account. And as such, you cannot evade tax. So while there is a advantage aspect to it, there's also a disadvantage aspect to it. The disadvantage on the part of the employer is that when the tax regulators come, they will ask for your financial statement. And the implication of it is that once they detect any tax evasion, or when they discover a tax avoidance, you are intentionally avoiding tax, you will be slammed. And the penalty is as high as 200% of what the person has intentionally avoided to pay. Then they will now charge additional penalty charges on it. So in summary, going into the year 2026, I want to advise us as HR professionals, I want to advise us as professionals with financial discipline to ensure that we deploy the service of a competent tax administrator. We deploy the service of a competent tax administrator, licensed, qualified tax administrator. Why? Because it's not going to be business as usual from the 1st of January 2026. And as HR professionals, we are saddled with the responsibility of being accountable for both the good and the bad that happens to the business. Moving on. The second thing that I would want to talk about is what affects, in fact, I want to believe everybody in this room, as long as you are gainfully employed. The Personal Income Tax Act is going to, in one way or the other, affect you. But there's a good part to it. The good part to it is that for those that are low income earners that fall between the annual threshold of less than 800,000, less than 800,000, you will not be paying taxes. So what's the interesting thing about Personal Income Tax Act? The tax exemption permits for minimum wage earners, right? Low tax for other low income earners, meaning that the higher your income, right, the higher your tax liability. So while you are on one side, you are happy that, you are now being promoted. What I want to encourage us as HR professionals is that, in fact, what most organizations are doing now, if peradventure your organization has not done it yet, what you need to do now is get the applicable, what they call it now, the payee template, right? The payee template that will be applicable effectively from 1st of January 2026, right? Get it and ensure that you factor the implication of the new tax band on the current salary, such that the management can project the financial implication of the tax increase for high income earners, and of course, the no tax impact for low income earners. Ensure that you make that proposal to your management now so that they can envisage what the financial implications are. And this is from me to you as HR professionals, as finance professionals, that if you have not done it yet, October will be done with in some days' time. Please don't sleep on this in November. Why? Because by the time, the news is going everywhere that it's important for you to prepare for 1st of January 2026. As an HR professional, as a custodian of financials, it's important for you to advise. If peradventure payroll doesn't sit on your table, maybe it sits in finance, your organization, I would advise you to besiege or ask your finance manager, ask your CFO, please, what are the plans? What plans are we making for the impact of the personal income tax reform in general? What plans are we making? I've had a good number of organizations that they've projected for it, they've planned for it, and they plan for it so good that it's not going to even impact on what your current net is. And this is the irony. If you don't plan for this tax impact as good as now, before the year is out, by the time you are going to factor it in January, the chances that it's going to eat into the net salary of your employees is going to be high, except if the management is willing to bear the liability. And if the management is willing to bear the liability, bear it in mind that you, as an accountable HR professional, you are meant to have advised them. You, as an accountable finance manager, you are meant to have advised them before the year is out, so that they can factor it into the budget of the coming year. So also, there is a simplified tax band and rates without consolidated relief allowance. I'm sure most of us are familiar with the consolidated relief allowance, which is currently applicable in the existing within the existing pay table. Another thing I find interesting is that there's going to be an introduction of rent relief of 20% of annual rent paid, subject to a maximum of 500,000 naira, whichever is lower, provided that the individual accurately declares the actual amount of rent. Now, this rent relief introduction is still a two-sided coin. More briefings will be given to us by the Presidential Tax Committee, because questions have come up on, okay, if we want to get a rent relief, I, as the husband, my rent is about, let me use myself as an example. Let's say I reside in Lekki. Of course, I won't get a duplex worth 500,000 in Lekki. Of course not. We should be talking of millions of naira. And what if I have a wife also that also has maybe a land, it also has a property, and she also earns, rental income? How do we factor this in? So these are the dynamics to the introduction of Personal Income Tax Act. So the good thing about it is that it has not been, so certain modifications of that have not been fully consolidated. But the pronouncement is that this tax band will be binding effective from January 2026. So, and again, filing of individual tax is now mandatory for every taxable person. What it means now is that moving from January 1, 2026, you as an employee, you can file your taxes. You, as an employer of labor, before now we've been having what we call self-assessment, right? Self-assessment this is actually talking about self-assessment. So you are going to go and file your tax returns, and by the time it is year end, or maybe it is half year, maybe a bulk duty audit can be carried out by the regulatory tax agency. They come to you and ask you, okay, please, can we see your financials? We know that we can see this. In fact, I give kudos to Lagos State Internal Revenue Service. Lagos State Internal Revenue Service, they are the best of all the 37 tax agencies that we have in Nigeria. They are so automated that as you are paying the money, in fact, before you even pay the money, you have to generate the invoice online. Once you generate the invoice, once you make payment, as you are making the payments, you are seeing the updates. And once it is time for them to now do audit assessments, of course, they run the audit assessment, and many at times there are still room for maybe minimal tax liability on the company as a result of as a result of taxable income that they are not factored in the cost of their day-to-day operations. So we have the band starting from 800,000. What it means is that if you earn 800,000, right, you are not subject to tax. Recently a friend of mine went for an interview and was asked that if you earn 800,000, will you be subject to tax? What that 800,000 means is that is the annual gross, not net, annual gross salary of the employee. So by the time you divide 800,000 by 12, of course, you know that is something that is for low income earners. So what it means is that if you are able to scale above the first 800,000, 50% of the next 2.2 million will be factored. 18% of the next nine, you notice something, you notice that there's a progression in the tax band up to 50 million. So what this means by implication is that if while you are happy to be promoted, right? Because I'm someone that I like to think deeply, and I like to project the future early enough. So if you peradventure you fall within 800,000 and you are promoted and you are now earning maybe an annual gross income of, let's say, 1.5 million, what it means is that you'll be paying tax using the scenario of that second band and that first band. I don't want to overflog this. Moving on. So we have also the capital gain tax, and one of the significant impact on capital gains tax is exemption for personal residences. So proceeds from the sale of individual residence property, including adjacent land up to 1 acre, will be exempted from capital gain tax, including personal vehicles. Then we also have a threshold for compensation. Compensation received for personal injuries such as loss of employment, defamation, libel, slander is exempted from capital gain tax up to 50 million. So what it means is that if you benefit up to 50 million, you cannot say you will benefit the next next occurrence. No, once you have exhausted that 50 million, the threshold is no longer applicable to you. Then we also have an exemption on share disposal. The threshold for capital gain tax exemption on share disposal increased from 10 million annually, right? So what it means is that you no longer get to pay capital gain tax on your shares disposal up to 10 million. But if it is above 10 million, right? If it is above 10 million, it will be factored in. Moving on. So we have changes to direct taxes. We have dividend income. We have no income tax for non-resident employees. So non-resident employees here implies that non-resident employees that are working maybe for fintech organization, or maybe for tech startups, or maybe creative art businesses are now exempt from personal income tax. However, in their in the home country of such an employee, it's important that they remit tax. I'll give you an instance. One of the reasons why it's always good to have your tax card, or why it's always good for you to have your tax record, is I recall recently a good number of in my past life, a good number of employees that actually traveled out before they give them um blue collar jobs. It is, or in fact, white collar jobs too. It's important that they what they call it, they tender their their how they've complied to tax in their home country. So we have dividend income. To dividend income received in the form of shares from any company or another company is not subject to tax or withholding tax. Then we also have permanent establishment rules for non-resident. If a non-resident has a taxable presence in Nigeria, they now face minimum tax. Remember I mentioned 15% earlier on. So there's also modification within the free trade zone. Now, exporters in free trade zone will lose some peg. Before now, they were fully exempted. So we had organizations that were in free trade zone. I think the likes of Dangote benefited it for so many years, but now they have kept those exemptions if they are within certain criteria. So we have pioneer certifications also. The pioneer status tax relief scheme is now replaced with an economic development incentive. The truth of the matter is that you see every of these modifications within the direct taxes is channeled to consolidate remittance of taxes majorly for employers of labor, right? And also to also ensure that taxes are not evaded by the likes of influencers, right? You know, we have a number of influencers that they don't even have physical office, but they have presence on social platforms. Taxes will not be evaded any longer as far as this new Tax Reform Act is concerned, and the penalties are quite grievous. Moving on. So we have changes also to indirect taxes. The first one we have there is the new VAT Act, which says that the phased VAT rate will increase from 7.5%, right, to 15% by 2030. However, that proposal was dropped and the VAT will remain at 7.5% to reflect the existing sharing formula. Another thing again is that several previously exempted items such as luxury goods, digital product will now be subject to VAT. The good thing about this modification is that quite a number of taxes are still going to be exempted. They are still going to be exempted. I think what I noticed is that the current government is trying to balance the weight of tax such that they will rather put the chunk on organizations with high revenue, high turnover, right? And create room for attractions to those that are of lower turnovers, right? And they're also promoting the likes of agricultural produces. They are promoting the likes of those employers of labor that are within the healthcare also. So essential goods and services such as food, education, healthcare, rent, public transportation, renewable energy will be subject to a 0% VAT rate moving forward. Also, we also have the existence of stamp duty obligation. I know that recently there was a charge of 50 naira on every 10,000 naira that you transfer. So the beauty of it now is that the new Tax Reform Act exempts rent below 10 million naira from stamp duties, but places obligation to pay stamp duty on rent squarely on the tenant, right? Another thing again is that there's further clarification on liability for stamp duty payment. The law clarifies, make clarifications on loan agreements. The borrower, that is the person taking the loan, is legally liable to pay the stamp duty. Now, imagine if Daniel, for example, takes a loan of 40 million. What it means is that by the time that 40 million will get to Daniel, it means that I would have to pay stamp duty on that 40 million. Meaning that the primary essence of applying for that loan, the financial worth will deplete. Because by the time the money gets to my hand, it no longer becomes 40 million. It's definitely reduced. Another thing again is the introduction of revised stamp duty rates and exemption, right? So the law makes provisions for clarity on unsecured loans, mortgage loans, replacements on the existing stamp duties, right? The Nigerian Tax Act repealed the existing Stamp Duty Act, replacing it with a simplified framework. It's simplified because it's now going to be consolidated. It's not going to be centralized. It's going to be, I recall when Buhari of blessed memory, President Buhari of blessed memory introduced um, BVN, you know, and invariably everyone that wants to run the transaction must have a BVN. So we are going back into an integration era, a tax integration era, where for every of your transactions, it is going to be, in fact, not only CBN will have it, CBN will have it, NDIC will have it. We are going to have a very robust tax administration system where nobody will evade tax completely. And the beauty of this thing is that we are open, as employees, we are open that we can actually hold the government accountable for the taxes that we pay. So another interesting thing I would want to bring to our attention is that it's important for you as a taxpayer to ensure that you get evidences for your tax remittances. Tax remittance evidence will save you greatly. It can save you. It could be vis-a-vis court litigation. It can save you at the point of possibly you want to buy a government asset. It can save you at the point of maybe you have a friend, or in fact you yourself decide to, give a trial to greener pasture, and your um, tax compliance certificate is being requested for. So the other changes is that one tax certification number will serve across the board, right? So we'll be having electronic filing, digital receipts, tax portal. I've mentioned this earlier on, that the entire system will steer you online. So we also have the establishment of tax appeal tribunal within the jurisdiction to settle dispute. This relates to, remember I made mention of Joint Tax Board Act, right? Tax Ombudsman may report relevant agencies to National Assembly or State House of Assembly for oversight in the event of failure to implement recommendation with satisfactory reasons. Moving on. So other changes relate to e-invoicing, mandatory adoption of electronic invoicing to promote transparency, curb tax evasion, streamline compliances for business. I cannot oversize tax identification. Tax ID is very, very important. It's a requirement to obtain tax identification number from all customers of the bank. It's going to be, in fact, a lot of people will have issues come January. I cannot overstress this. So if you don't have your tax card now, I would implore you, please get one as soon as possible. If you are a resident of Lagos, just go to Lagos Internal Revenue Service portal. It's very easy. It's a very, very easy process. Another thing again is the disclosure of tax planning arrangement. All taxpayers are now required to disclose any transaction or arrangement that will result in tax advantage, right? Maybe tax advantage such that maybe um, circumstances or transactions that are geared towards reducing your tax liability. Is important for you to now do was to now disclose those transactions. Now, transactions disclosure requirements to disclose transactions above the sum of 25 million for individuals and 100 million for corporate organizations. Also, requirement to disclose any form of merger, any form of acquisition. The summary of this learning session is transparency, transparency, transparency. It cannot be overemphasized. You also need to update documents required every foreign exchange transaction. Tax compliance certificate is no longer required as one of the documentation requirements for processing your FX transaction. So that is one of the pros of the modification of the Tax Reform Act. So principal officers also will begin to attest to income tax returns. Principal officers of companies are now liable for the accuracy or otherwise of that of the companies they lead. Principal officers are now required to sign off on income tax returns. You know what that means? What that implies is that if there is an infraction, such a principal officer can go to jail. It's as simple as that. Thank you. Moving on. So what are the implications for businesses? There's improved clarity on tax laws, fostering compliance, and to build a bridge in resolution of tax disputes. Also, reduction in overall expenses, right? Overall expenses due to inclusion of input VAT on expenses as a result of deductible item from VAT due on taxable revenue, right? And the tax administration is going to be quite stricter, and there will be increased penalty for infractions, forcing discipline and overall system improvement. Now, the increase in Personal Income Tax Act is going to tell on the salaries of mid and senior level employees. So you can see the icon reflected as red. What it means is that that is the implication of reviewing the personal income tax moving forward. Sorry, at this point, I would like to confirm if we have questions from the house. Do we have questions from the house, or I'm just speaking to myself? Can anyone hear me, please? Doctor, are you there? Can anyone hear me? Can we still see my screen, please? All right. Please, can anyone hear me? All right, beautiful, beautiful. All right, beautiful. I just wanted to be sure that we are all following. Thank you so much. Thank you so much. So before I go into the practical session, okay, you have a question. Okay, please, can you kindly unmute and ask your question? I can see we have comments. We have a lot of comments in the chat box, about 37 messages in the chat box. All right. All right. Okay, Mr. Fat. Okay. All right. So before we go into the practical session, we've tested the depth of the theoretical aspects. Please, if you have question, okay, can't unmute. All right. Please, okay, what you can do is you can just drop your, okay, I'll have to unmute you. All right. Let me take it from the first. Let me take it from the top of the questions. At this point, I would stop sharing the screen and take unmute, then I take questions. Just hold on, please. So, okay, I can see Moses Olagoke has a question. I'll come to that, please. Okay. Okay. All right, just a minute. Okay, trying to read through the questions. Okay. 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 Okay, Moses Olagoke. All right, just a minute. All right. I just want to be sure, Moses Olagoke. Let me check the audience. Moses Olagoke, just a minute. All right, Moses, you can now unmute, please. Mozolago, are you there? You can now unmute and ask a question, please.
All right, thank you for the opportunity. Though I've dropped the question on the chat, but I was just trying to be clear on the first 800,000 that is exempted. I feel it is on net, not gross. I might be wrong. I just want clarity also, so that after all deductions, so it's going to be that 800 is after other deductions. Then if you still earn 800,000, then you are exempted.
Absolutely, absolutely, absolutely. I guess that clarifies the question. All right. All right, just let's try and attend to other. Okay, I can see Olu. Oh, brilliant. I can see Soji already responded to you. All right. Absolutely, it's gross, it's on gross. Yeah, thank you. So if your company pays pension, right, and NHF, then it's a net annual income. Absolutely, absolutely. I can see we have brilliant tax professionals in the house. All right. Okay, Olusoji Ayodeji, you have a question. All right, at this moment, let me try and unmute you. Olusoji Ayodeji. All right, please, you wanted to ask a question, please feel free.
Thank you, Daniel. Thank you for this interesting section. I can't but continue to appreciate your expertise in this topic. But my question is just on what you said about principal officer signing a document. I want to get clarification on what document and why will he be responsible for inaccurate remittance on tax? I just want to get that clarification clear.
All right. All right. It's actually an introduction, actually. Because before now, if you would agree with me, many organizations cut corners when it comes to remitting taxes. Why? Because they have insiders in the regulatory agencies. So that is more of a trap. And that is what it is. And I'm being honest with you. It's more of a trap for employers of labor to take a pledge that whatever they are remitting is correct and is not impaired. I don't know if that answers that.
I get. Okay, I'm okay.
Police, did you get my response? Did you get my response? Hello, Olusoji, did you get my response?
Yes, he has responded. I got it.
All right, that's fine. Moving forward, let me check the other questions we have. Okay, I think we have responded to Olusoji. Okay, moving on. Okay, I can see Itini. Itini, please go ahead with your question, please. Let me unmute you so you can just a minute, please. Itini. Just a minute, please. Itini. All right, you have the floor, so you can kindly unmute and speak.
Okay, thank you, Solomon. I really appreciate your time and your expertise in handling this subject matter. Thank you so very much, and it came right on time. Yeah. So, my question is this: on the 500,000 rent relief.
Yes.
I know across board, everybody at various levels have to pay rents, or maybe some have their properties which they live,
Yeah.
So I want to know if there any caveats and what are they going to use to justify the fact that somebody is paying rent? Because as it stands now, it's going to really affect everybody across the board. I just wish that the government has made it an unconditional relief as it was previously with the 200,000 naira relief for everybody.
Yeah.
Because it will now give room for some how would I for people try to play smart, on government. So and then make some people, so I don't really know how that is going to be handled. Yeah, that's one. So about I know previously the current tax law, there have been a relief also on um,
All right.
life insurance
All right.
premium. So I want to ask you, is it also applicable in this current or the new tax law? Do we have a relief on that premium,
Okay.
as well? So that's what I wanted to ask. These two gray areas that needed clarification. Thank you.
Now, it's still exempted from. But now we'll get into that within the illustration I have for us. Then there's other material I would share. In fact, let me try and see if I can drop it now. Just a second. Let me try and see if I can drop that material. And so we can, because of the benefit of being here, we can just download it. Just a minute. So on your question regarding the rent, in fact, it would have been the best thing. Just give us a flat rate and, either create a balance between consultant relief allowance or maybe 200% of the rent relief. You understand? But I believe there is a reason for that reaction, because it's actually a reaction, right? I believe there's a reason for that, but more details will be shared. Where I'm even standing is, if the husband earns a rental income and the wife earns a rental income, are we going to say we are going to limit it to the benchmark, right, of that 500,000? It's, as far as I'm concerned, it doesn't really make any sense. But of course, these are experienced professionals and they know what they are doing, and this is how they know how to do it best. So more details provided to that as far as the rent relief is concerned in the coming days. I want to actually drop a material for us. Trying to lay my hand on it. Okay, I think I got it. Let me try and see if I can drop it here. Now this time. All right. Trying to see if I can drop a message. I'm trying to see if I can drop the message. Just a minute, please. Oh, Mr. Wasil, thank you for the message. I appreciate. All right, I'll find a way to drop the message before the session is over. All right, let's move on. All right, Sarah Bisola. All right, I'll be unmuting. I will unmute you now so you can ask your question. Sarah. All right, Sarah, you have the floor, please. You can go ahead to ask a question.
All right. Good evening. Thank you so much. Well done. Thank you for your expertise. I really appreciate this session. It has been enlightening. So my question is actually regarding small businesses, and I would like to use the word very small business, because when you were explaining, I think company tax.
Can you take a pause there? When you say very small business, when you say very small, hold on. When you say very small business, do you know the organizations that they are less than 25, right? In Nigeria,
Yeah.
and I'm being honest with you, their turnover is over, if I'm not exaggerating, their turnover is over 20 billion. Do you know the organizations like that?
Yes, I won't dispute that.
So in context, how small is small when you are saying small?
Okay,
Because
that's why
when the tax practitioners come, the first thing they will ask you is, so please, can we get your financials? And what they are going to be hard for is your turnover.
No, okay. So
So
I'm talking about
in the scheme of finances, in the scheme of financials, small is not small. if the turnover is
Okay.
big. Thank you.
Okay.
Move on.
Okay, so I'm actually talking like, let me make an example, like a makeup artist now who has a shop and then just have an account, a business account, and in the bank, and also is registered with CAC. You know, I don't know how they do their financials and all, but then it's not really so direct as like that. Some just pay into, some clients just pay into their business account, some even pay. How do you explain like the tax to them? How can they file their tax? Because some of them can actually afford a tax consultant, or like how are they going to do the tax? That's my question for businesses like
All right.
that.
Okay, that's informal sector, right?
Okay, okay, it's an informal sector.
All right. Now, the interesting thing about informal sector is that while it all depends on what they make, right? It all depends on their revenue, right? And the government is going to ensure that what will I call it now? The appropriate agencies will communicate with them. And I'll give you an instance. Imagine if Daniel is a pepper trader, right? And I'm not making much because I sell in Chisco in Lekki, right? I sell close to Chisco in Lekki, and I'm transacting. Do you know a day will come within the year that you'll get a message from the tax authority? It can just be SMS. Have you ever had such a scenario before? Are you there? Hello, can you still hear me? Hello, are you there?
I can hear you. Maybe you just continue.
All right, brilliant. I'll give us a scenario. In fact, we don't need to be bothered about informal sector. We don't need to be bothered about. I'll give us a typical scenario. Recently, if not 2 weeks ago, a commercial bus driver was on Tomeland Bridge, and he picked a call. Do you know that the following week he got an alert from the regulatory Lagos State government saying that he has a liability to pay? Do you know the implication of that? The implication of that is that the day that his documents will expire and he will want to go and renew, they will wait for him. So the system is so integrated that you don't even need to bother if you are an illiterate that you are transacting. You don't. The most important thing here is you give accounts. Now, a woman who is not learned, transacting, making money, and that income is taxable, she will definitely get get messages from the tax authority. We don't need to worry ourselves. The good thing about it is that their first what they call it, their first communication will be some sort of invitation to you. So if you evade the first one, evade the second one, then there will be a problem on the third one. I don't know if that answers your question. There is going to be integration, a thorough integration. In fact, one of the reasons why this consolidation of tax reform act was brought together was because of the existing loopholes. Let's now narrow it down to the likes of what they call this, the likes of all these road. I don't want to call them agbero, that gets levies from vehicles that park and all of those things. Gradually, the responsibility, the functionality will be withdrawn from them. That is one of the primary aim of this thing. So talking about the maybe the artisans is the smallest of it to bother about, because will an artisan not use a phone? The only account is if that artisan does not operate an account. That artisan operates cash account, right? And even if that artisan is operating a cash account, there will still be a deduction to it. So nobody is going to avoid it. Then there's a question on Did I just say tech companies will be exempt from tax? No, not absolutely. What I imply is that for tech organizations that have low turnover, for you to run a tech organization is many a times their capital are usually enormous. So ultimately, most tech organizations will not exceed because of the turnover. All right, moving on, please. Okay, how will government handle information? I think I've answered that already. Okay, moving on. Nojim Wasu, thank you, Mr. Filamo. Thank you, Nojim. I've seen you. All right, I'm muted. Okay. Trying to look at further questions. All right. Okay, I want to believe we don't have any. Okay, I believe the reason why documentation is required for any tax relief claim is to confirm the amount, claimant detail, homeowner details, authenticity of the document. If the name of the document is the husband's name, there's no how both of them can claim tax relief. True. However, I trust Nigerians. It is the time to put Mr. and Mrs. on the receipt, even on at this. I believe you can only lay claim on these ones. Absolutely. Only once for the entire year. Somebody mentioned that deduction could be from airtime charges. Sorry, I'm sorry, Etienne, can you please clarify what you imply by that, please? Let me unmute you so that you can. Let me unmute you. All right. Trying to get it across to Etienne. All right, Etienne, you're trying to say something. Please, you can now unmute.
Okay, yeah, you have unmuted me. So
Yeah.
I don't know, there was a conversation that happens somewhere around my office where somebody mentioned that where there is a fault, that the fault has also could, that the tax could be deducted if there's if somebody has defaulted and there's a handshake integration with the service providers, that a lien could be placed on somebody's line, and so that whenever you do your recharge, the money will be recovered. Government can recover the money
That's very true.
from your recharges directly to government accounts.
That's very true. That's very true. Now, what is even more scary? Thank you for bringing that on. What is even more scary is that it will get to a point people will not be able to transact with their accounts again without TIN. It will definitely get to that point. All right. So in the absence of no further question, I just want to share my screen and give us 2 illustrations. And on that note, we'll call it a night. Let me know when we can see my screen, please. So I have an illustration here. You can ignore the watermark, right? The illustration indicates basic salary format, right? Up to total tax payable. If you can take a screenshot, and if you can lay your hands on it, I can assure you, you'd realize that preparing the payee table template to know what you're going to pay as taxes is not going to be a problem. So if you can take a screenshot on this, just take a screenshot. Basic salary, housing allowance, transport allowance, you have entertainment allowance, leave allowance, right? Taxable value on BIK enjoyed, right? You get your annual gross salary. Then you remove your retirement allowance, right? 500K or 20% of annual rent, whichever is higher. Then we have 2.5%, that's NHF, right? Which is optional. Mortgage interest, life assurance premium. I think someone mentioned of that earlier on. employee pension contribution, right? Employee pension contribution is 8%, right? 8% of your basic housing and transport, HMO, right? So you have a taxable income, and from your taxable income, you prepare your you apply the tax band, right? Once you get the total tax payable, what you then do is you divide that total tax payable by your gross pay. So it will be total tax payable, right? Divided by your gross pay. That will be the amount you're going to pay monthly. So we have a current computation here. I would just advise that we just take a screenshot because of time, trying to be timely conscious. So if we are adopting the current, this is a typical scenario of an employee that earns the same salary, right, with the current tax band, yeah, and the employee earns the same salary with the tax band that will be applicable effective from January. So I would just advise that we take a screenshot on this, and we can apply and see what the results will be. So you can see that in the first scenario, the effective tax rate is 16.47, right? And on the second scenario, the effective tax rate is 15.37. So I want to ask the House, what did we notice? In like 1 or 2 minutes, what did we notice as a result of this computation? Why is the tax based on the proposed computation of Nigeria, what do you call it now? Tax Act, why is it lower? If you want to speak, you can just raise your hand, then I'll allow you speak. I'll give us a minute or two to actually brainstorm on this. Don't forget that you had a considered relief allowance on the first one, right? And you have a rent relief on the second scenario. I also want us to take a look at the total relief. You realize that, like in the first scenario, the total relief is higher than the second scenario. So if you want to walk back to get what your CRA is, just what they call it, get your pension, right, and deduct it from that total relief that was arrived at. So I want to come to the chat box. I want to see, I know we have tax experts in the house. I would like to get our responses. The gross income remains 15 million, but based on the new tax computation, the tax rate depleted, it's reduced. So I'll be coming to the chat box now. Do we have anybody? Anyone? Can anyone tell us why the effective tax rate reduced? Anyone? Or do you want I hope we're all following. The focus of the Nigerian Tax Act 2025 is to reduce tax liability of absolutely. Brilliant one from Mr. Lushola Ayodeji, brilliant one. All right, so let's go to the second scenario. I would share my screen again. Please don't forget the advices I passed on. If you know that you've not made provision for it, please make provision. All right, sharing my screen now. So this is because the aim is for low income earners to pay lower taxes. So you realize that the tax payable here on the first instance is 2.4, while the tax payable on the second note is 2.3. So what it means is that tax is on the precedent of the higher you earn, the higher you pay. So this is another case. So I want us to take a look carefully at it. The gross income is 35 million for the two cases. However, the taxable taxable pay, right? No, the total relief is 9 million for the first one. Total relief is 2 million for the second one. But the tax payable is 6 million for the first one. The tax payable is 6.3 million. Can anyone give a trial as to why the new tax act is surcharging an higher tax rate? It's similar to the same thing to the first case we had. All right, I'll give us 1 minute to just take a screenshot, and I'll be in the chat box. All right, coming to the chat box now. All right. So do you have a response from anyone? Yeah. Please, I don't want a response from Olushola. I know we are in spirit together. So Olushola, it's good to have you also participate in the house tonight. Can we get a response from anyone? It's still the same thing, actually. It's still the same thing. I just need a response from someone. All right, I'm going to help us out then. What it means is that the higher your tax, okay, good. As an employee, don't just bargain for salary increase without paying attention to it is very, very important. Very, very important. I think it is because it is a progressive tax system. Absolutely. Absolutely. That's correct. Absolutely. The CRA reduced the tax burden and now the tax band is progressive. Absolutely. Brilliant, 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 brilliant. So let me just give us a takeaway from what Mr. Olushola has suggested. Whenever you are going for any interview, please let your negotiation be on net. You know what that means? It means that exclusive of all taxes, exclusive of all deductions, your take home is your what? Your take home. So on that note, I would want to pass my the humble mantle back to the pioneer and founder. Dr. Oluyemi, please, you have the floor. Thank you. Hello, Doctor, are you there?
Thank you so much. Thank you so much, my brother. This has been a very excellent and timely exposition. Ladies and gentlemen, just so we know, in the next few weeks, we are still going to run around this topic, this Tax Reform Act, but we'll be bringing another HR practitioner that is also a lawyer. Okay, we'll be bringing another HR practitioner that is also a lawyer that will also be looking at this tax reform, because we cannot know too much, and we'll continue to share perspectives around this. I will enable all of us to unmute now and express our appreciation to our chartered accountant and chartered HR practitioner. Let's just unmute and celebrate our brother.
Thank you so much, Solomon.
Thank you so much, Daniel.
Thank you. Thank you. Thank you so
Thank
much.
you.
so much,
Solomon,
Daniel.
thank you.
Thank you, Mr. Daniel. Thanks a lot.
Thank you. Thank you. Thank you.
My boss. Your brother.
To reach out to you. You know, I have your contact, so I'll...
Thank you. Thank you. Thank you very much. Thank you.
Mr.
Thank
Daniel,
you.
you are going to see me on your LinkedIn profile soon.
Thank you. Thank you. Sorry, I didn't get that last one.
I said you are going to you are going to see me on your LinkedIn profile soon.
Thank you. Thank you. Thank you.
That's Ayodeji speaking.
Oh, thank you. Thank you, Mr. Ayodeji. Thank you so much. Thank you. All right. Thank you so much, Doctor.